Sometimes it's a little squirrely. Share my screen. All right, so we are recording as far as I can tell. All right, so this is the investments class, Ed. It's a bull. We use the bull. We're bullish here. That's the New York Stock Exchange and a flag. And similar to the last class, we have a module approach, meaning every week we go through a different agenda. And let me just hit a couple of housekeeping items. Can you close that door, Ed?
Yeah.
Okay, so we are joined very gratefully today by our special guest from Fidelity Investments, as everybody knows. This is Ed Monaco and Rachel Oscar. Both from Fidelity Investments, Ed from New York City office. And you're down just to see us, really appreciate that. Ed is a regional vice president in the private wealth management division or group. Explain what that is. Rachel is a regional director, regional manager from the Covington, Kentucky branch right up the road. So it's really nice to have both of you here. Thank you so much. Really do appreciate it. We have a couple little things to talk about. So you do have, I put a quiz up. Probably see that quiz is a 50-point quiz just to get you to that 125-point level. So you can get rounded out before the midterm, which we know is next week. By the time you take the midterm, a week from Thursday, you'll have some large percentage of 500 points. And that's half your grade. And you know I'm required to put in the system. Right? But that's not official. So everyone's doing a nice job. Let's keep that going. The quiz is 25 points on a reflection of what we're going to talk about today with our guests. Another 25 points on a company and a stock called NVIDIA, which we'll talk a little bit about. We'll talk more about on Thursday. And I'd like you to analyze it going down our playbook. We use a little playbook and we simplify our look at securities because it's so many variables, so many moving parts. So we try to identify if the company's growing, any market share, a company like NVIDIA serves where it is. And we look at the internals of the company, oftentimes the margins and the trends that affect, and it's very company specific. So for Netflix, for example, we looked at all the competitive threats to their streaming subscriber base. In case of Netflix or video, we look at the margins expanding, all of these markets they're getting into, like artificial intelligence, gaming. And then we want to make some kind of comment about valuation. So we're starting to talk about valuation, and we use so far primarily price target ratio. Really haven't done much. We'll do a little bit more in chapter 13, but that's your quiz. Okay, so that's your quiz up there, ready to be aced. All right, it's not due till Sunday night. So let me know any questions at all. So this class, unlike last class, Rachel and Ed, I'm just going to kind of do a little content, then ask you to feather in some comments about Fidelity Investments and what you do for a living and so forth, right? So let's start. And everybody knows this tab is all of the information related to the contacts for Rachel and Ed, all of the videos and other PowerPoints we're going to talk about a little bit today, and some articles, including the one I handed out to you, Mindsets When We Get Ready to Invest. And I'd like to use that, Ed, as a way to talk about what private wealth management really is and some of the principles of it and the kind of people that work in it. And maybe some of us will work in it in our careers. But what we also do every week, this is our want, we have a current events tab, articles and news flow. It always is called something like that. And this is where I wanted to start. Okay, so we recall this transaction. Microsoft bought a company called Activision Blizzard. What do they do, Spencer? Remember Activision Blizzard? That was the company Microsoft made a $68 billion all-cash bid for. Jacob, how you doing?
How are you?
Meet Ed and Rachel. This is Jacob Stinnett.
Hi,
Yeah. Jacob's a very sharp investor mind. All right, so you recall this company that Microsoft wants to buy, called Activision Blizzard, is in gaming. Very good, Ed. You still got it. You still got it. So let's go to what we do, Ed. Rachel, we use this stuff at the top of the page. It's like so annoying. All right. We use a website called cnbc.com primarily to get our market news and data. It's pretty reliable. It's free. It doesn't have a lot of pop-ups. So we understand when we look up a stock like Microsoft, this class would quickly be able to tell you this is a huge company, over $2 trillion in market cap. Shares outstanding times the price of the stock, so we can measure how big these companies are and how much market cap they're gaining or losing, which is a reset of their cost of capital, if you think about it that way. And this company made an all-cash bid for Activision Blizzard, ATVI, last month, I think it was. You can see the action in this stock price. On the day that happened, very obviously, that huge jump up. So Warren Buffett, who's Warren Buffett? Can't even know who Warren Buffett is. What did he do?
He was Berkshire Hathaway.
Yeah, what's that?
Don't they like dabble with real estate and stuff like that?
Yeah, it's a big giant investment company, basically. Right? He's made the world's most successful investor in history with this amazing track record. We look at his annual letter to shareholders every year, and we reference it. And you should read that when it comes out, I think even next week, but there's a long description of his track record, which is amazing. So it turns out he bought the stock like in November or December. He's very, very close friends with the Bill Gates Foundation. Bill Gates, you know who Bill Gates is? Simon? Who's a the founder, right? So the question would then be, did he have a little tip, a little insight tip? And the Wall Street Journal actually ran with an article and said what? Do you know? Ed, what did the Wall Street Journal say?
You know, they intimated that he might have had some insight. Right?
Yeah, that's correct. That's exactly right. And Warren Buffett actually went out of his way to try to debunk that. And he wrote letters to the press, the Post, CNN, and Fortune to say, I didn't do that. And even if I did, it didn't give me a leg up on the market. Right? So he said all the purchases were made, or most of them, in October. In October, well before this deal was consummated. And he's even speculated he doubts Microsoft talk about that. So he's trying to lay out his case. Well, and he further points out, even if he did, they bought the stock at $77. He could have bought it after the deal was announced at 78, because we all know, even though that offer, I forget exactly what it was over $90 a share. Over 90. But the stock didn't go all the way to 90. Why doesn't that happen? You know, Shannon, why did the stock immediately go to the page for that company and activity? Remember? So, what? Yeah, a lot of people selling. Yeah, well, there was a lot of people selling, but part of the reason they might have, even though there was a big jump up in the stock, it didn't quite go all the way to the bid, because there'd be at least some chance this deal is closed, right? Some chance the regulators will let it happen. And so Warren Buffett is just pointing out that this dynamic only drove the stock till 78 or so. So the evidence is pretty clear. Warren Buffett is not cheating the market in any way. And I like the way he ends this. He said he's posting this letter on Berkshire Hathaway's website to clear up any misinformation that may have been ingested before its correction in order to have the record corrected after I'm not around. So those are the things the kind of things you write when you're 92 years old. Legacy. Did anybody see this? Did you see this factor? I actually didn't know. Yeah, it's kind of weird. It's kind of weird because he's got a really good reputation, right? Real risk to that based on what's happened here. Do you, Rachel? Is that okay? All right. Well, who knows? We'll follow that story as close as we can. And we do follow the markets pretty closely here in this class. And I want to just give you a little example, Ed, Rachel, how we do that.
Yeah, I use CNBC. I use the app on my phone all the time.
You do?
Just to check the markets, a couple quick news, and I think it's a great.
What other ones do you use? Apps or so forth?
Apps, like obviously I get the Wall Street Journal delivered, and I get the electronic version. I like Barron's a lot. I don't know if it might be a little bit. Barron's comes out weekly. It's the same for people that produce the Wall Street Journal. I find that interesting. But as far as apps, I'm probably more old school, but I do like the CNBC, and there's one called Market Watch, which is pretty good.
Yeah, so the students here are very lucky. We have a deep resource bench from the library, so they have free access to the Wall Street Journal and other publications, and we have ways to do that students have been through many times and outside reading documents. We try to stay current. And one of the things we've done to this point to stay current is at the beginning of the semester, not requiring any knowledge really, or even really any deep investment knowledge. We were each given $1 million hypothetical dollars, and we were asked to invest it in some measure in stocks, bonds, cryptocurrency, or just leave it in cash. And the only rule was we had to have at least 5% in each asset class. That one's our portfolio. And then a little later in the semester, a couple of weeks ago, we had a chance to buy Netflix at a certain price. So we represent exposure to the Standard & Poor's 500 through a State Street ETF called SPY. This is the ETF called the now Bloomberg Aggregate Index, which is how we get exposure to the bond market. Primarily U.S. Treasury bonds. That's an ETF that gives us exposure. This is a relatively new ETF that tracks Bitcoin, BITO, and then there's Netflix. So we're keeping track of it. And as everybody knows, it's been really hard to make money this year, no matter what you bought. But we do want to see where we're at and against a certain customized benchmark, which is just 25% of each of those original 4 asset classes. What did we name that, Cam?
Pinkerton Composite.
So Pinkerton Composite. There was a lot of controversy about that name. It was a close vote between that and the Midway 4, but we decided on the Pinkerton Composite through a poll. So Simon, if you would help me, let's see what the price of the SPY. Let's see. All right. Down 8% since the beginning. These percent changes are from the beginning of the year that are coming in.
3.77.
Oh, that's not too bad. Simon, you may be able to tell when they're heavy.
Netflix is 375.
Some students decided not to buy Netflix at all. Okay, so we rebalance. The benchmark we're trying to beat, and we're not grading us. We're not grading people on how much money they have left. We're just grading it on the process. We're trying to do some quizzes around the process. Okay, so let's see. It's hard to make money this year, right? Nobody has their $1 million. Some people have less. Simon is hanging. Your number starts with a 9. I mean, that's not. We've only lost $95,000 this semester so far. Down 9.4%. And Spencer, if you went heavy in Bitcoin, but we all know the lesson here, and many students did a great job at not panicking, not rebalancing their portfolios long term.
How often can you rebalance this?
So far, we've only had one chance to do that. At the same time, we created an opportunity for the students to buy Netflix, which is a stock hit. It was after the stock went down. After the quarter, it went down a lot. We analyzed the stock for our playbook. Our students made some cases to buy the stock or not. So we're still kind of getting up to speed. This is week 6 of the semester, I think, or maybe week 7. Right. So we're not investment experts yet. We're trying to build some fundamental knowledge of what it's like to be an investor. And critically, what these tools are, including ETFs. So a couple people have done okay though, right? So Rebecca, Jacob, Taylor, I know is doing well. Bitcoin kind of got you. So we'll keep Cody. That's very respectable, right? So if you're down 5.7%, you're in that ballpark. And if you were getting graded on this like I used to, as an institutional money manager, portfolio manager, you'd be sweating it. If you were down a couple hundred basis points below the benchmark, you'd be like, oh, what's I do? Right? And that's the decisions we talk about all the time using textbook stuff. All right, so we'll check on that. It's not too bad, Simon. Yeah, I mean, it's a long semester. See what happens. Okay, so let's then make sure that we know, we've talked about this, and Ed, this is how we discuss different securities and different asset classes. We try to break down what the tools people are using. In this particular chapter, our textbook, this is mostly chapter 4 stuff, highlights different types of investment companies, right? So a mutual fund is technically a company, right? And the trend towards ETFs and why we ever forget, we take our quiz, we pick our midterm, try to study from the stage, ETFs are growing in popularity, we're raising a lot more money, attracting a lot more money. The fees are lower, primarily, the embedded fees, the management fees, lower usually, converging a little bit, and better tax treatment, and they're just easier to trade. So I want to ask, this is a way for Ed, if you don't mind introducing yourself, and tell us a little bit about what's going on in your world, and maybe even specifically on this topic, the growth of ETFs.
Sure. How you doing, everyone? My name's Ed Monaco. Nice to meet you all. I work for Fidelity Investments. As Mike said, I'm a regional manager for our private wealth management group. So that means I manage a group of advisors spread out throughout the region. The Midwest is part of my territory, Chicago, Cincinnati, Covington, as well as New York, where I'm from. And I've been at Fidelity a long time, and the industry's changed a lot. When I first started, it was just mutual fund. ETFs didn't exist. And now when ETFs come into the, you want to get into a little bit of background? Or
Please, if you don't mind.
Background?
Yeah, I've got your slide deck up here, so.
All right, so I'll tell you a little bit more.
This is,
I thought we were getting right to business here.
Yeah.
So a little bit about me. I figured a picture's worth 1,000 words, so I got 3 pictures to sort of summarize a little bit about who I am. I grew up in Yonkers, New York, which is a suburb
Feel free to, if you would like.
of New York City. This is great, man. I thought I was just gonna sit in the audience.
Well,
I see how he calls on
No.
people, so now I know how he operates.
that's right. Well, trust me, they'd rather hear somebody talk.
So I grew up in Yonkers, New York. I'm from a big family. I have 4 older brothers and a younger sister. There's 6 of us. My father was a school teacher. We grew up in a very blue collar neighborhood in Yonkers, right on the border of the Bronx. I have a big family, so this is us at the Jersey Shore. That's not even all of us. Every year we go and we have sort of like this called a family reunion in summer. 35 of us all together, and it's a lot of fun. We stay connected that way. We've been doing that for 45 years, so it's a big part of the tradition of mine. The Swimmobile, I think, summarizes the city. It's like the city of Yonkers Swimmobile. So, you know, we did have public pools, but there was only a couple. And so this thing is basically, if you ever seen one of those industrial dumpsters, that's what it is. It's clean, and they put a liner in it, and they drive it to the park, and they fill it up with water from the fire hydrant, which is freezing cold, by the way. And you go swimming in it as a kid. And every day they go to 2 parks, one in the morning, one in the afternoon. You look up where they're going to be, you go there, you get to swim and play around in the day. So very city kind of thing.
Wasn't your brother a lifeguard?
Yes, my older brother was a lifeguard there. And he worked there 2 summers. One, he was a lifeguard, and he always reminded me that senior year of college, he was a senior lifeguard. So he was, he actually got to like drive the thing. And so it was a good place to grow up, but certainly we did not have, you know, we were middle class to say the least, which is great. It was a great way to grow up. And, you know, I pointed that out to Mike because now I'm running a fancy office at Fidelity in Midtown Manhattan on Park Avenue, right? So it just goes to show.
There it is. There it is.
And there it is. That's the view from my office in New York City. That's Grand Central, and that's Midtown, and that's Park Avenue. So it's kind of cool because it didn't take any special gifts or talents or connections. Just work hard, you know, put in the good work, try to make connections, try to do a really good job, and find things you like to do, right? I didn't have a career in mind. I just liked what I was doing and tried to find the next best thing and keep doing that and build relationships. And right now I manage this big region for Fidelity. We're an organization within Fidelity that caters for our highest net worth clients. So we deal with clients with $10 million or more. So it's kind of a sophisticated, high-end part of our organization. Fidelity in general, though, by the way, we're not an elitist company. We deal with clients of any dollar amount. People start with $50 to start at Fidelity. So we're very much a company for the people. But we did need special resources to deal with some clients that got high net worth. The other picture was me working at Yankee Stadium, where I was a vendor growing up in high school and a little bit. Actually, I guess it's just high school. And I put that in there because it was a good, scrappy kind of job. You know, you had to hustle. It was 100% commission. You only got paid what you made. You didn't sell anything. You walked out of there with $0. And the harder you work, the more you made. And I sort of thought of that as a life lesson. I mean, I think that pays off. Even in a job like not mine, where it's a salary, you may think, well, if I work hard or don't work hard, I'm really making any more money. But over time, the effort you put in shows up in the results, shows up in the next opportunities, etc. So that's a little bit about me. I started with Fidelity in an entry-level position, just like the ones we have in Covington, where you're answering phone calls. Didn't need to be licensed, don't need to know anything about investments. You'll learn a lot in this class. You'll be ahead of what a lot of people come in with. You don't need any specialty or expertise because we train you. And we get you up to speed on what you need to know. And we train you on how to talk to our clients. And you can really start a career that way. Rachel and I both started that way, just answering phones out of college. So
that's good. Before I ask Rachel the same question, could you tell us, use this slide, your Fidelity slide. What is Fidelity for the benefit of the students? So
Fidelity is a really large company that predominantly is known for mutual funds. So see, you're all familiar with mutual funds. I think I saw it on the last slide, where people pool their money together and you get a professional to invest it, right? Fidelity has about 300 mutual funds. And we were one of the first ones to go direct to the public. Back in years and years ago, you had to go through a broker to buy a mutual fund. Fidelity said, you know what, we're going to cut that component out. Someone can invest directly with Fidelity. And so we became known as a way to save money in a very easy way with low costs. And so that is professionally managed. And so people put their personal money with us over the years. And then we also became really popular when 401ks became. Is people familiar with what a 401k is? I'll hit it real quick. You work for a company, it's a retirement plan where you put some of your own money in. Sometimes the company puts some of their money in. That didn't exist 50 years ago, but 30 years ago, it just started. I forget, Fidelity jumped on that bandwagon. Now almost every company, many companies have 401k plans.
And there's a tax advantage to that.
Yeah, it goes in pre-tax, lowers your taxable income. So Fidelity became a company that many companies use for their 401k plan. So Fidelity is this big company that invests money, and we do it in two ways. One is you just come into us directly, pay $1,000 and want to invest it, or you join up with a company, their 401k comes through Fidelity as a company-to-company sponsorship. And so we've become a tremendously large company. We have $11 trillion that we have. What that says now, we have 79 million customers. So it's really big because we offer really good investments at a very low cost. And we can talk about cost when we talk about ETFs and mutual funds. And we were ahead of the game really when we went direct to the consumer and when we became big into the 401k plans. So
yeah,
I'm trying to think of what else might help people understand Fidelity.
No, it's brilliant. And Ed and I have a special connection to it perhaps because we went to undergrad together in Boston, at Boston College, which everybody knows is tired of hearing by now. You may have seen me won a basketball game last night.
Oh, yeah?
Yeah, 5 ACC wins.
Nice.
Expected. And one of the superstar portfolio managers at Fidelity, going back to when we were in college, before we were in college, is called Peter Lynch.
Mm-hmm.
And Simon, you may have told me, somebody read one of, he's written, he happened to have gone to Boston College, which is just a coincidence. But he was a real connection to BC because of him. And he's written a lot of amazing books, including one called One Up on Wall Street, which is for all you investors, soon to be professional, maybe investors. That's a book that reinforces some great principles. You know, one of the authors of our book here, Marcus, happens to be a BC.
Oh, is that right?
So, yeah. You'd be surprised how often I could work VC into this lecture. It's like, trust me, it's astonishing. Yeah.
The one up on Wall
Yeah.
Street was probably my favorite book on investing, this type of investing, with understanding stocks. It's kind of old now and company examples are old, but
Yeah.
you really hit the basics, like Mike's talking about PE, how to compare whether it's growing, doesn't have debt, put in a really understandable way. I found it really valuable.
Oh, that's good. So we'll see if there's any questions after. Maybe Rachel, may I ask you to do the same thing? I'll put your PowerPoint up to introduce yourself. And again, we really appreciate you
We're happy to be
all
here.
being here. It means a lot to
This is
us.
much more fun than our
Means a
normal
lot to
day,
us.
right? So Rachel Oxshire, I live in Walton, Kentucky, which is just up I-75 and about 20 minutes from our Covington, Kentucky location. These are some pictures of my family. So my husband Brian and I went to college together at Georgetown College, so just up the street from here. We were college sweethearts and have been together pretty much ever since freshman year. And then we have two little kids. Vera is my daughter and Brody is my son, and they are my why. So when I think about why do I do what I do every day, it's to really provide them, the education that they deserve and to give them the opportunities that I want them to have. My tie here to you all here in Midway is in the upper right corner. That picture of me, that's me, my mom, and my three sisters. My sister Amanda graduated from Midway about, 10 years ago maybe. She played softball here, loved her experience here, and is now a counselor at Grant County Middle School up where we live. So that's my Midway College connection. I was here on campus often watching the softball team play. I almost said perform, and I know that's wrong. And then there in the bottom corner are all of my little nieces and nephews with my kids, and they're just super cute, and the why behind what I do. And I think a lot of times as females, because a couple of females in the room, investing is the thing that it's like, ooh, it's a male-dominated industry, and it can be a little bit intimidating. How do you have a full-time job? How do you be a good mom? How do you do all of the things? And Fidelity is a place that has enabled me to kind of have it all and to do both, and to be the kind of mom I want to be, but also be a really phenomenal employee at the same time. And so that is something that I am truly grateful for. And I love how many more women are investing and are, taking charge of their financial futures than when I was in college. So that's a little bit about me. The second slide here is our Covington campus. It's gorgeous. We have walking trails, it's got a Starbucks in it. We have our cafeteria. I think about this campus very much like I thought about Georgetown's campus or any college campus. It's literally filled with all of some of my favorite people in the world. And, I've made a lot of friends throughout my career at Fidelity, and we're kind of all in it together. And it's so neat to be on campus and to see people that I haven't seen in a long time. So I consider our campus kind of my second home, if that makes sense.
Yeah, and I'd like to, if I could pick up on that point, Rachel, by using a piece of content from our Canvas module this week. So there's an article, or at least a link to an article. We talked about the Buffett article about some interesting new trends related to the growing ETF category, which is why I previewed it, involving Fidelity.
Mm-hmm.
Okay, involving Fidelity. So we know by now that SPY we invest in, that is an ETF that's sponsored by State Street.
Mm-hmm.
Other big companies, including BlackRock and Vanguard and Fidelity, also have these ETFs that they publish and house and manage and take money in for. This little article, which was just on, I think that was Thursday, is talking about a few high yield, so-called high yield ETFs. What we're talking about here is corporate bonds, companies borrowing money in exchange for paying interest in a category that is generally used to be called junk bonds, Ed, if you remember. It's now like the more like sanitized high yield bonds, which is reflective of a company that might be encountering a little bit of trouble. The price of their bonds have gone down. What happens when the price of the bond goes down to the yield, Jacob? It goes up, right? Yeah, it goes up. And we looked at even the yield to maturity calculation underlying that last time. And we know that prices down, we yield up. There are certain classes of investors that want to take that chance, lend money to a company that maybe is a little bit shaky, but they want more income, they want more interest. That category, which is usually defined as anything more than 300 basis points spread to the US Treasury yield, but it sort of doesn't matter. High yielding, high interest bonds, including one launched by Fidelity, Ed and Rachel, which is I wanted you to get some I want to get some comments on, not the product per se, because I know you're not in the product development area, but this particular ETF from Fidelity, again, investing in bonds, high yield bonds, also scores the company on something called ESG ratings. ESG ratings. We've talked about this class and the other class, in fact, environmental, social, and governance. So maybe you could both, maybe Ed, if you could speak to the, well, in any way you'd like to, both of you, talk about the trend of companies investing in companies that score well on this and do things, prioritize more than just say making money.
Right.
And more importantly, what kind of company is Fidelity to work for on those metrics?
Yeah, I'd say, ESG is still relatively new. It wasn't a lens that we looked at in the past. We thought it was the most number one thing was just to invest in companies that can make money. Now we do have a certain subset of funds, not all of our funds, that will look to see how well is the company we're investing in doing along the lines of environmental, social governance, right? Or are they being good corporate citizens? Is there environmental impact? Is there diversity impact? Things like that. In fact, I think Morningstar now added a screen for ESG. How well they do that?
What's Morningstar?
Morningstar is a company that rates and analyzes mutual funds. So really, it's a really well-regarded industry expertise on mutual funds. They also, I think, now analyze stocks as well. If anyone's really interested in stocks, I think you have to pay for it, unfortunately, but it has kind of a funny name, but they actually do a pretty good job. Motley Fool, I don't know if any of you are familiar with them. They do a pretty good job of analyzing companies. I would imagine some of their content is free. But ESG has become much more important. But I would say it's still a subset of the book. We have 100 funds, maybe 10 of them are focused on ESG, and the other 90 are still like invest anywhere. But it's becoming more and more important.
And I would say, just to chime into that, this is coming up because of the younger investor crowd, because of the people that are younger are thinking more about not only how do I make money, but how is the money that I'm making impacting the world around me? And so this has come directly from clients asking for it. And one of the things that Fidelity does is listen to what people want. And a lot of people at this time aren't looking for just let me make the most money. They're looking about how am I impacting the world around me and what things can I make sure. Like I personally don't want to invest in tobacco industries or in those sorts of industries that might be against some things that I believe in. And so a lot of investors now are starting to think about things like that and starting to make sure that they're managing or that they're buying portfolios that are thinking about the things that are important in their world.
That's great. Anybody have a question at this point for our?
Yes, I want to move it a little bit towards on that point. So how's serious is Fidelity itself? What kind of place is Fidelity itself like to work in terms of being an inclusive place?
Yeah.
What's it like? What's the culture like?
Yeah, I mean, so one of the things I start with is Fidelity is a private company. So when you think of a small business, a privately owned business, a mom and pop business, they tend to be able to run themselves differently than if there are outside shareholders dictating how and what they do. We happen to be very large, but it's still a family-run business. It's on the third generation of owner. So that allows us to do things differently than a company that has to answer to shareholders every single quarter. I give you an example of the 401k business. When we first started investing in sponsoring company 401ks, it was not a profitable business. And the view was that it wouldn't be profitable for 5 or 6 years. Most companies would not enter into something that's not going to produce a profit for 5 years. We did because we're private. It became one of our biggest revenue generators and one of the biggest benefits we have in the firm. So that's just one example. Getting back to the culture, though, Fidelity's kept this family sort of culture. They're very, very, there's a heavy emphasis on collaboration, collegiality. We're not a hard line sort of management system. Our boss, who runs the whole organization, has a call every other week just to get everybody together, and he always starts out by saying, "How are you all doing? Are you taking care of yourselves? Are you taking care of your family? Do you need more time off? Do you need more resources?" Like, a lot of firms aren't thinking and talking that way. Our CEO, Abby Johnson, got on, made video almost every other week during the pandemic, alerting us to what she's doing to keep employees safe. They added new benefits just during the pandemic. They added like counseling if you needed it. They added additional daycare. They added additional flexibility. So they're definitely a firm that cares about their associates. And now diversity and inclusivity, it's always been welcomed at Fidelity, but it's really front and center now. We have a DEI organization. We're doing a lot to recruit women and people of color to make sure that they're represented, that they're welcome, and that we're actively recruiting them to bring in a diverse population in our workforce. We've listened to, we're also adapting to a younger demographic, so that, what we've heard is folks want more flexibility, want to have a say in sort of how and when they work. We've created a lot more flexibility in both the hours you can work, remote work, attire is no longer, there's no real dress codes in certain parts of the business now. So we've really tried to become a lot more flexible and inclusive to both gender, diversity, and even demographics from an age standpoint. So.
Oh, it's helpful. Where do you think, Rebecca, Abby Johnson went to college? Just if you had to guess. It's not true. It's wrong. I don't know where she went.
Bentley?
I don't know. It was.
I don't know where she
It
went.
wasn't.
No.
She should. She tried. She didn't get it.
I thought you were going to say she went to Boston College, and I was
Yeah.
like, wow,
I
I
know.
didn't
I
know
know.
that.
I'm sorry. I ask unfair questions
that was
all,
unfair.
all the
This is
time.
very unfair.
No,
That's
that
on
is
the quiz
great.
that
That
you
is.
didn't get that wrong.
Yeah. No. And I joke, but I do want to take us back, Rachel, to the tab, the page here that I created for this time together to talk about a couple things related to how we can get these students, if they're interested, interviewing in the mix here at the Covington office or really anywhere. And if it's okay, I'm going to play one of the videos. So let's try. Which one should I play? Did you wanted to give us a sense of what it's like
Yeah,
to work?
First one or the third, what's that third one say?
Make a difference?
No, not that one.
Oh,
I think try that one.
year one at Fidelity?
Is that
We
what
didn't
that
watch that in the last class.
Why
so-
I
Yeah, we didn't
can't.
watch that one, so put that
Let's do
one.
that
No, the other one above.
Okay.
I definitely had anticipated that stereotype in my head of thinking they're a typical financial person.
Sometimes people tell you that Fidelity's culture is like great, but just experiencing that is completely different from hearing it from someone else.
I started this job in July.
I actually got started at Fidelity about 7 months ago.
I started July 13th, started remotely.
The fact that people are, ready to welcome you with open arms and like give you the knowledge they have and be excited about it was basically the real hub.
Only being here for 4 months, I've already been supported in so many different ways.
At Fidelity, you can use everyone takes up and to sharing.
So it's almost like training wheels. You get that side by side, hand-holding support, and then they slowly start taking off the training wheels and you start riding that bike by yourself.
People are open to talking with you and just to at least figure out sort of where you want to go, what you want to do, and how do you want to push yourself forward in different directions.
There's a lot of mentors in my life that have been with Fidelity for 10 plus years.
The average tenure is ranging from 10 to 20 years. It's just a very, very open and supportive network of people that really care about each other.
Just knowing that even at an entry-level position, my work matters is really gratifying.
Fidelity is supportive. Fidelity is diverse.
Fidelity is a great place to work.
And Mike, show that first one because it's only 2 minutes. It's the
Okay.
position that we're actively hiring for in Covington right now. We have it's called the customer relationship advocate. It's an entry-level position for college graduates. You do not need any experience. You do not need any licensing. We coach you and help you pass the industry exam that you need called the Series 7. We give you time to study. We have a real good program. We map it out. It's all sort of mapped out for you. And you'll hear the people's backgrounds that speak to this role, how different their backgrounds were. None of them were quote unquote, focused on getting into necessarily financial world.
Yeah, I'll do that. And that was a great video. I do think it painted a picture of like what the culture is like at Fidelity. And this really is a sharp group of students at Rachel in our investments. This is only the second time this investment class has been taught that I created a year ago. So this is the future of the Midway Finance program. And I really appreciate everybody supporting this, taking this class, because most of these students I've had a couple of times. These are really good students, and I hope some of them wind up at Fidelity. Let's see.
Yeah, so
One of the funnest things about the customer relationship advocate role is the confidence that you gain. I always like to share that if you had asked me, hey, what's the one job you would never do? I actually would have said a call center financial services role.
I majored in biology. My bachelor's degree is actually in classical piano.
My degree is in communication studies and sport management. So if you're wondering why I'm in finance, I was wondering too for a while, but I'm here and I love it.
A lot of people come in thinking that they need to already be a financial expert. And one thing that we know at Fidelity is that's definitely not the case.
Throughout my training, Fidelity has shown me that not only is the seat there, but I've earned it through my own accolades.
You get your licenses, you learn about the firm and the industry, but your manager will quickly say, hey, I love having you on my team, but where do you want to go after this?
Looking back at my time in the CRA role, one thing that I think is so cool was just the amount of impact I would have on other people's lives when it came to being that educator for them.
This is truly a place where you can bring your specialty, your craft to the team and you want it and use.
A lot of other places don't do that. It's more so about you developing yourself. At Fidelity, it's everybody's there to help you develop.
Whatever lifestyle you want to live, we have benefits for it. Whatever career path you want to go down, we have a position for you. Whatever metrics or stats you want to be able to hit and move, we're going to give you that opportunity.
Okay, I like that. Let's add, Rachel, I'll take you to this landing page that you sent us. So I'd really like you to say Taylor, Patrick, Ryan, so they're interested, they want to work at Fidelity. Let's make sure we know exactly how we're going to get in touch with us. So here's a opportunities link. The first one is the job posting, basically, or the job description. I figured out how to open it recently.
You might be able to apply right there.
Yes,
Okay.
you can. That green apply button. You would
Oh,
just
yeah.
select that,
All right.
put in all of your information, upload your resume.
Mhm.
It's a super quick way to apply. So you can absolutely do that for either of the first two kind of links that you have there. The
And
third link you have on your page is
Can I-
essentially the
before you,
sales.
I'm sorry, Rachel, to cut you off, but this is a good job, right? It's a good solid base with benefits, right? This is like no joke here, and it would totally get you launched into a career. What's that, right?
Said for Colorado only. I said I'm moving to Colorado.
Oh, all right. Is that
Sorry,
people have heard?
the
so-
link must be for the wrong one, but there is a site in Colorado in
All right.
Denver. There's also one in Salt Lake City,
Yeah.
there's one in
Actually,
Jacksonville,
scroll up to the
Florida.
top, I think it lists the locations.
Yeah. Oh, all right. My bad.
Click view
Oh.
all
Yes,
9
right there.
locations.
Oh, okay. All right. my
Those
bad.
are all regional centers, each one of those places.
Covington, Kentucky. I don't imagine that the base is much different, center by center,
No,
right? I mean, I
no.
don't, so but anyway, that's just your start, right? This is why we do this stuff, right? So I'm sorry to cut you off, Rachel, but.
No, I was just gonna say, but
yeah.
if you do want to move to Colorado,
Yeah.
moving to Colorado working for Fidelity is a great option as
Heck
well.
yeah.
And that's one of the things both Eddie and I have done in our careers, is we have moved within Fidelity in order to take roles that are of interest to us or because of the location we wanted to be in at the time. So,
Uh-huh.
I'm specifically in the Covington location, but there are positions across the United States that if you are looking to move, you could absolutely move to.
Yeah. And if the students were interested, their Ed and Rachel's contact is on your page. They could send you an email and put you in their network and well, let me just mention this before I forget, Rachel, but there's a talent network which you could sign up for, right? So you get, if you fill out the necessary information here, you're going to get emails and other alerts pertaining to presumably job openings and things going on at the company. which is really cool. Easy breezy way to do it. But we also, and I don't have the link on this one, Rachel, but maybe they can, I'll put it on here, but there's a description, because not who's graduating in May. I sort of know that, but okay, so that's great. You get a job, maybe interview in a hot minute, as we talk about maybe working at the local office, but maybe you can talk a little bit about the internship and part-time program too for the.
So are any of you juniors by any chance? Okay, so junior year is a great year to get an internship. And so Fidelity offers a program that you could apply for, or you could do an internship with us over the summer. Go ahead and study for your licenses. So our frontline associates have their Series 7 and 63 licenses to help clients with investing. So you would get your licenses, and then you'd be able to work part-time through your senior year. And then as soon as you graduate, you could come on full-time for Fidelity. So it's a great way to potentially make some additional money while you're still in college, and to have an internship as well as a full-time job as soon as you graduate.
Yeah, so that's good stuff. All right, any questions so far for our guests? We really appreciate you guys being. I mean, this is really good insight into a terrific company that I've learned a lot even from you guys being here about the culture and the welcomeness of the Covington branch. And again, you've said this, Ed, you don't have to be even a finance lover or Wall Street person to succeed in, God bless you, in Fidelity.
Yeah, I would say any background is welcome. And once you're in the firm, there's also different areas within the firm. You have marketing folks, or we have people that like operations or computer analytics or risk or, technology. So, it's not just people that have investment knowledge. So yeah, we welcome, and again, our Covington site is growing fast. We're really eager to hire people that have an interest in just, working and learning. You don't need any special skills or majors or information or knowledge. As you saw from that video, people came from all different backgrounds, right? Construction, piano, whatever they were. So if you're interested, we're eager to talk to you. And if you do apply, certainly if you apply, you reach out to Rachel or myself. And if you want to just connect with Rachel or myself, just to ask lots of questions or about anything in general, feel free to reach out. We want to be a resource to you just in general, even if it has nothing to do with Fidelity. Just the workforce, I'm happy to be a resource. But certainly if you apply, you don't go into a black hole with those sites. Our recruiting people do look at them, but if you're going to take the time to apply, definitely reach out to Rachel and myself. We'll get in touch with the right person.
Yeah, that's so valuable. Really appreciate that. And we'll make that the first point of contact. So if you're on one of those links and it looks like you're going to Colorado or something, don't get discouraged. Just write me or Ed or Rachel or all three of us an email. And if you show interest, I can't speak on behalf of the company, but I believe you'll get a good response. You'll get a good response, and let's see what happens. I'd love to see some of us up there, and at a minimum, like getting an interview up there, going to that beautiful campus up there. It's an hour drive, sitting for an interview. It'd be great experience.
Currently, a lot of the interviews are being done via Zoom.
Right.
Oh, is that right?
Yeah, so you wouldn't even
of
necessarily
course.
have to come onto campus
Oh,
and
yeah.
do an interview at this time.
Yeah.
They're doing a lot of them via Zoom.
And if you do get an interview, I know we're getting ahead of ourselves here, but you call us, we'll talk to you, a little prep, interview prep, little practice. The one thing I'll say in general, I know there's some seniors and some juniors, that if any company you interview with, and this may be obvious, just do, Google them, do a little homework on the company. You don't have to know them inside and out, but understand the basics of the company is helpful when you go into the interview. But certainly with Fidelity, reach out to us for sure.
I'm glad you said that, Ed, because I have driven, hopefully, that point as hard as I can about some, research skills, right? We know how to look up a company's 10Q and recent press releases now, and it would have to be a public company. It's a little easier when it's a public company, certainly, but even a company like Fidelity, there's a wealth of information readily available. And we also preach a daily reading habit with Wall Street Journal and CNBC and Bloomberg, and we look at charts of the day and things like this. So these are good habits to get into. I'm sure over the years you've curated your own list, Ed and Rachel. And how do you get up to speed in the morning when you guys wake up?
Yeah, I mean, I read at CNBC. I just like it. It's easy, it's straightforward. I'll be honest, I scan the Wall Street Journal. I don't read it closely, but I see all the headlines. I read a few articles that I want to. So I'll know about something, like I knew all about the Warren Buffett, but I didn't read the actual, some of the details. I'll read certain things that are either more interesting, more topical to me. And then I will, like I said, I really like reading Barron's on the weekend. It just gives you more of a full perspective of what's happening in the market in a more big picture way. But daily, I'd say even if you just check in a couple times on CNBC, just to sort of stay a little bit in tune, you're ahead of the game that way.
Mm-hmm. I'll show you something if I can manage to get to my homepage, which is a big if. Ed and Rachel, we have an outside reading list that I've put together, and there's suggestions, and it's all free. And this is not like a required textbook per se. And, CNBC, Bloomberg, chart of the day. So our Wall Street Journal, what I've told the students is, and I'm glad you said it, is we don't all read it cover to cover, but what almost every industry professional will do is read down this column, right? The West News column. Those are the business and finance capsulated stories, and the same one worldwide, right? So you get up to speed very, very quickly doing that. One good habits to get into, and they're really good habits when you get one interview. You probably want to, you don't need to maybe know the minutia, even the Microsoft Buffett thing. We go over things I had in class to highlight our topics, but you probably would want to know what's happening, as we've talked about many times. A little group project, Ed, where we said, okay, Ukraine, there's geopolitical concerns, and what does that mean for the stock market, the bond market, commodities market? So I want to reinforce, thank you for reinforcing that. I think that's a great thing.
Mike, going back to when I said look up a company, I don't even mean like the financials of a publicly traded company, but if you're interviewing with a company, just understand a little bit about what they do, what their culture is. Every company has a website, I would agree, and just peruse it. Again, you don't need to be an expert at it, but if someone applies to Fidelity and they just don't know anything, I'm a little bit disappointed. Say, again, you don't need to know a lot, but hey, you're a mutual fund company, that manages a lot, even that's basic enough. And you can find that usually with a Google search.
Mm-hmm. This computer, that didn't help it. Okay, thank you. No, that's brilliant. So maybe, Rachel, if you don't mind, I've handed the students out some fact sheets about the Covington office and what it's like with its 4,300 people. What's it like up there, and how welcoming is it? You think a Midway student would do well? You're a real connection to us, which is why we're so happy you're here personally and being close by now. So what might it be like for a Midway student working there?
Sure. I think you all would love it. To me, it feels a lot like a college campus. You walk in, you've got a cafeteria, you've got a Starbucks, you've got a career center. So we actually have a person on site who is able to help navigate a career at Fidelity and help think about kind of what your next step should be. So there's a whole center dedicated to that. There's a wing for training. So as we hire folks, we train them and onboard them and give them the skills necessary to do their job and make sure they have everything they need. And then each team sits together with their leader, and everybody kind of doing, say, in the customer service role would be doing kind of sitting together. So you'd be seated around people that are doing a similar role to you that you can learn from and hear from. And that's all kind of pre-COVID. Right now on campus, only folks that are kind of raising their hand to go in are the ones in the office. Almost everyone else is doing their job remotely, which is a really big benefit for Fidelity employees during this pandemic. There's also a gym on site. There are walking trails. You kind of name it and it's pretty much there. But for me, it feels very much like when I go in, I'm seeing all of my friends. I'm seeing the people that I've kind of grown up with at Fidelity.
Excellent. Yeah. Okay. Yeah.
I remember when I first graduated college, worrying that I was going to go into an office and there's 2 or 3 people sitting there and it's kind of quiet and kind of boring. And I had this, and then when I walked into the phone site, I don't know if you can see from the videos, it's open architecture, everybody's in queues, hundreds of people people walking around, like Rachel said, to the cafeteria. I mean, it's just an energy, and you don't feel like you're stuck behind a desk, right? And it was really kind of a cool environment to be part of. And I'd say this about Fidelity is we shoot for a 100% success rate when we hire people, and I don't think every company does that. I think companies hire in mass and realize that some are going to make it and some aren't. We will give the resources, the support, the training that you will not fail if you want to do well. It's like literally we're shooting for 100% success rate for people to come on, do well, enjoy it, and hopefully stay for a while. Yeah.
Brilliant. Okay. Any questions? We're gonna maybe move the topic. Ed, my dear friend Ed, has made the mistake of telling me that he has an interest in being an instructor himself, a professor, a teacher at some point in the future. So we're going to ask Ed to give us a little 5-minute mini lecture, which he was not told about.
It's always the best.
Prior to this moment, on private wealth management. So Ed, your title is private wealth management. You're in the area of private wealth management. So let's go back to your, and this thing is really kind of jacked up, but there are some articles at the bottom of the page, including investing mindsets. Ed, everybody's been handed out one of those. So in 5 minutes or so, why don't you walk us through this document and tell us a little bit about what you do, what private wealth management is, and what it's like working at Fidelity in private wealth management. And we'll switch seats. You can come up here.
Yeah, so
And you can just move it down.
great.
On the screen.
Nothing like getting a guest lecture spot. Thanks, Mike. Appreciate that. Yeah.
Do you need the article?
That might be useful. Well, first off, so private wealth management is a group of interests. Like I talked about Fidelity, really large company. We cater to your everyday mom and pop investors. People save for their colleges through 529s. People start accounts with $1,000. A lot of people built up accounts over the years. So again, I don't want to sound elitist because Fidelity is very much for everybody. And we have some clients that have really significant assets. And actually that everyday client mentality that Fidelity had hurt us in some regards, because when people got to significant wealth, 10 million, 15, $20 million, they said, well, Fidelity's kind of where I went when I just started out investing. Now I need something more sophisticated, more complex. And we had that, but the perception wasn't there. So we built a different organization called Fidelity Private Wealth Management, which is exclusively for clients with $10 million or more that have more complex financial needs. So what we do is we do a lot of estate planning. We connect with their accountants, with their attorneys. We get to know the family, not just the customer. And we really try to pull everything together and help them understand, hey, you have a lot of money. What would you like to do with it? Do you have it so it's set to go to the next generation? Or the charities you'd like to give to? Do you have a complex business structure that you'd like us to help you understand? So things got more complex. So we built an organization that deals just with those clients. That's what private wealth management does. And so we have additional resources and things like that to help those type of clients make sense of what could be a very complex situation. Okay. What this investment mindset is really universal to investing at Fidelity. So Fidelity's investment philosophy is very much, well, you guys talked about it here, asset allocation. Anyone familiar with sort of what that means generally? You guys are doing it in that model that you have, where you have money in different asset classes, right? Keep it real simple. You have stocks, you have bonds, and you have cash. So if you put money in all three of those in that model that you have, you have an asset allocation. Depending how much you have in stocks versus bonds versus cash, depends how much risk you're taking, right? Stocks tend to give you a greater return over time, but have more risk, right? Fidelity keeps it real simple. We're not trying to time the market, put money in, take it out, because you just don't know. You can't predict the market. We do feel like you should have some money in equities for growth, some stocks. You should have some bonds because they provide a cushion and some income, and have some in cash for a variety of reasons. One of them being maybe you need emergency access to money. So what this article talks about is,
Put it up. You don't mind.
oh, it's not up there?
I
there it is.
You see it now?
Yeah, just scroll down, wherever you want. Sorry.
So these so put away private wealth management for a minute. I wanted to give you a little bit of insight into what that part of our company does. But these are investing principles that we just believe are fundamental. For someone starting out, this first one, in fact, Rachel was talking about this when we were just chit-chatting earlier in the morning. She said, oh, if I could just tell people, just put $100 away. Just start with something. It says, don't worry about starting small, because money does add up. The most important thing you have going for you is time. Right, and Warren Buffett always says, we talked about him, time and the magic of compound returns, compound interest, earning money on itself over time, right? So don't think that you're too small of an amount is not going to add up to anything. Over time, it will, and particularly if you're consistent. So number one is, get into a habit if you can, even now, even if it's $50 a week or $100 a month. Once you get into that habit of it happening automatically, it'll start to add up. Number two, are you people familiar with the rule of 72? Really, really handy. It says in here, you take 72, divide it by 7, and that's how much the money would double in 10 years. So if you have, let's say you're going to earn 7%, it would take 10 years. You can use the rule of 70, to round it. If you had 10 years and you earned 7%, it would double in 10 years. If you earn 10%, it would double in 7 years. Whatever combo makes 70 is how long it takes the money to double. And so it's kind of an interesting benchmark, because if you think about it, if you put 10,000 in today, and let's say you were able to get 10%, in 7 years you have 20,000, and then 7 more years from there, 20 becomes 40. So in 14 years, 10 went to 40. It's a pretty meaningful impact. It just gives you an idea of how money can grow in a window of time. Obviously, you make an assumption about the rate of return, but it's kind of a handy little benchmark to know what money might do over time. But it's really, really powerful. And there's some cool growth calculators online where you can show, and again, I don't have the numbers with me right now, but to get people to invest early, they show if someone started right out of college at age 23 and put $2,000 a year away till they retired, versus someone who waited till they were 35, right, and put $5,000 a year away. Well, the person who started and put only $2,000, but they started so much earlier, has a lot more money at retirement time. So the earlier you start, the much more powerful the compounding becomes, which gets us to the next one. Don't try to time the market. And no matter how sophisticated investors are, they always, like right now, right? What's the market been doing in the last few days? It's been going down, right? It just seems so obvious. Like, well, why wouldn't I take my money out, right? Like, and we have customers that say, even I can tell you the market's going down. What are you guys doing? Get me out. And our whole point is, well, we have some money that's out already because that's our asset allocation, but we're not going to try and time what the market does. If you remember, well, in 2008, the market got hammered, right? It came back pretty quickly. And actually, when the pandemic started, it went down significantly, quickly. A lot of people went to cash because it felt like it does now. Well, it's obvious the market's going down. Well, guess what? It bounced back really quickly. And it like doubled in like 18 months. Well, people didn't know when to get back in because you don't, and so they missed all of that. And there are people, I have literally clients and friends that are still in cash from 2008. I mean, it's a long time ago. They missed incredible returns. And so what we always say is just stay in the market. This statistic's interesting. If you put 10,000 in the market for, what's this, 20 years? If you just put it in the S&P 500, right? You didn't even try to beat the market.
40 years ago.
I'm sorry.
No, I don't mean to correct.
You saw 1980.
No.
Like,
Well, when I saw the $1 million, I said, wait a second, that's not 20 years. But think about this. Yeah. Can I make this bigger? No. So 10,000 invested, just left alone in the market. Now 40 years sounds like an awful long time, right? But if you put 10,000 in the day you graduate and don't touch it till you retire, you're a millionaire in this kind of market. But if you miss the 5 best days, look how much gets shaved off. So what happens is the market jumps big in small windows of time. And oftentimes it's actually after, there's been studies that show oftentimes it's after a steep decline. So you get out when it goes down and then you miss that big jump. If you missed the 10 best days over 40 years, just the 10 best days, you earned half as much money as just leaving it alone, which is just incredible. If your timing is poor, you're gonna really, miss out. And if you just simply leave it, and the way you get comfortable leaving it is by knowing you have other money that you can get to if you need it. And that's why we talk about asset allocation. Keep your financial goals in mind. We have a lot of really cool planning tools. Again, it's probably a little early in your career. I mean, you could do retirement projections really easily. If you just said, hey, I put a few $1,000s, let's say I assume I get a job, I put $5,000 a year away, which is probably a realistic amount in my 401k, grow it at a hypothetical rate, and it'll give you a dollar amount at the end. What we want clients to do as they start to get into working life and trying to save for a home and for kids' college and things, we have different worksheets for those different goals that'll help you build an asset allocation. And then lastly, of course, we wouldn't be financial planners if we didn't tell you to ask for help if you need it. The thing about Fidelity that we think we have a leg up on some of these newer companies, like the fintechs that are coming out like Robinhood and things like that, is we believe we have those type of capabilities and our apps are really good. There's tons of free information on our website. You also can get a live person anytime you want. Our phone sites are 24 hours, 7 days a week. You can call up, ask questions. And we do think it makes sense to reach out and get help when you're just starting out or when there's a major life event. You get a new job, you have a 401k, whatever the case may be. So I know I kind of went fast, but those are sort of the 5 investing mindsets that really pertain to any investor. And while they sound simple, you'd be amazed at how people try to overcomplicate things. The other thing you guys talk about ETFs and mutual funds. I mean, the industry used to be try to find the hot mutual fund manager, Peter Lynch. Now it's a lot more about indexing and just tracking the market very, very inexpensively and with very, very low tax consequences, which is what makes ETFs very popular right now. So that's a big shift in the industry over the last 10, 15 years.
That's great. You're a natural. Who would take a private wealth management class from Professor Monaco?
Any questions on what I ran through? Anything at all? It's not on what I ran through.
So what got you started and what you're doing right now?
Yeah, good. I love this question because what got me started at Fidelity was me sending out about 150 resumes after I graduated to any company because I didn't know what I wanted to do. I just wanted a job. And so I got on board with Fidelity. And I started in a group that I didn't love. It was called fund accounting. It was really like a back office, sort of clerical, a lot of analytical sort of documenting numbers, which was okay. I liked the people I worked with, but I really loved the work. But in a short order, I was able to network my way or apply for a job where it was on the phone center, what we talk about here. We are answering calls, you're getting licensed, you're learning more about the investments. Much like Mike, each day we start a little bit of a market update. So it was much more interesting to me. And so once I made that move, then I was very engaged in the job, the company, the career, and I just kind of moved up from there to slightly more advanced. So the phones, you start at one level, then you get to answering more complex clients, questions, et cetera, et cetera. Then I became an advisor. So I don't know if I answered your question, but what got me into it was just starting out, just trying to get a job, and then finding something within the company that I really liked, and then just moved on from there.
Very cool.
Yeah.
Any other questions for Ed? I got to get you to the airport.
Oh, the last thing I'll say is, don't. What time's your class end? Your first job, you're not married to it, right? You find out you like it, great. You find out it's a big company like Fidelity, you might not like the job, but you find another job you do like. So I wouldn't. Certainly find something you like, but I wouldn't overthink. I don't know, I don't know if this is good advice or not these days. People are a little pickier than I think when I graduated, but you're not married to the job. You get a job, you get your foot in the door, you meet people, you get some experience. If it's not what you want, you find something else. So I guess that would be my take is, and Fidelity, the manager works with you to try and help you get a job that you might like better than the current one you're in. So we're really trying to partner with our employees. It's a really good, it's a really great culture. So really good place to work.
Yeah, and I would recommend every student in this room. This is a really, really sharp group, and Rachel. And if anyone wants to follow up, these are people that I hope really do. This is an excellent group, and will be very, very good representatives for what we're trying to build here at Midway in terms of our finance program. Okay, Thursday is a
Any final questions before we thank?
All I was gonna say was Eddie did a great job, but I do want to reinforce with each of you, if you do not currently have a brokerage account at a firm, it doesn't have to be Fidelity, you should really open one. The power of 72, the power of investing early, like you saw that, what was it, 10,000 turn into $1 million. You can do that. Each and every one of you can do that. So really, if you're not currently investing or you're not currently saving, I would encourage you to try to do that in your own personal finance world.
That's excellent. Well, there's a formal thank you coming, a book, a historical book written by Dr. Boykin about the history of Midway.
Nice.
Which
Great.
is a tradition to get a little, and I joke before, part of the tradition, I always forget to buy these things before. So really, it's a terrific group. Please follow up with Ed, Rachel, their contact is on the page, or follow up with me, and I'll help any way I can. Thursday's like a freestyle day. We'll talk a little bit on NVIDIA and your assignment, but if you're gonna prioritize that career fair, go for it. Go to the career fair. You're gonna sign up, you know you're there. We're not gonna do any new content per se on Thursday before the midterm review on Tuesday, or the midterm review, okay? But note that your assignment is due Sunday night. All right, good job, everybody. Thank you, Rachel. Wall Street move. Ed's got to make a plane.
Yeah, right.
It's like it's a hot shot move, total hot shot move there. Good job, Taylor. Good job, everybody. Good job, Ryan. Rainy day. Good job, Pastor. This guy knows a lot about stocks.
I don't know about that. Nice to meet you.
Oh, thank you, Cody. Good job. Simon, double header day. You got a lot of Fidelity. A lot of Fidelity.
Yeah.
Yeah. Dennis, double header Dennis, double header Madeline. Good job, you guys.
Nice to meet you.
Excellent job.
Thanks for having us.
Great coming
It's
out.
nice meeting you.
It's so nice to meet
Sam and
you.
Spence are gonna be on my, and hopefully many others will be on our research investment challenge team. This group right
Great.
here, these three right here with winners.
That's awesome.
So we're gonna do a lot of fun stuff. We'll keep Fidelity closely posted on anything we do.
Yeah.
Awesome.
If that's okay.
Absolutely. Would love that. And if there's anything we can do to help in the
Good, how
future,
are you?
let us know.
We will. There's no doubt. Do you have any questions for, there's Jeff. I just don't want to move on. Do you have any questions?
Thanks, you guys.
Thank you all for coming again.
You're welcome.
Hi, thanks for having us.
How you doing, man?
Nice to meet you.
Nice to meet you. Good questions. Yeah. Good to see you. Absolutely, man. Good to meet you. Good to see you. Thanks for coming.
This is way a cool place.
Yeah, it is. Definitely. It's really good place.
I think you guys, you got some serious thoughts.
Yeah.
And then we gotta just get, I need to teach a class. I
Yeah.
don't want to teach a class.
I love it.
Wouldn't that be cool?
Yeah, very cool.
I
love it.
all. Right?
Listen, well,
I'd be
management, I
happy.
know, man. I have, well, kidding aside, we just built that organization 10 years ago. I got in year 1, so it was like a pilot. So I didn't build it, but I was part of the team that helped this thing build and grow. And so I kind of saw it from the ground up, Mike, which gives you a little bit of a